Ladies and gentlemen, welcome back to the show, and today I'm going to talk about my short position. I found this new, it's not new, but it's browserpad.org, and it's a browser-based notepad, and this is super convenient. I can just put my notes in here. But this is my short right now. My entry is here, and I'm not going to put this on the chart, but I think we're going to go down to 39,312. I'm being very precise with these numbers, but I think we're gonna head down. 39,312 is about right around there, and I think we're gonna come down at least to here, and see what happens from there. It's just we've had a little bit of a pullback, like the most minor thing. Now we're on the weekly. If I take it to daily, probably get some more affinity. There we go. We get a better picture. So I think we're gonna wrap around a little bit. Now this doesn't look like a big wrap around like this or like this. This looks like, a little bit of a, well, you know what? I shouldn't talk so much because this could be a big red candle that comes down. I do still think that the first week here of March is going to be pretty bullish, and then we're going to switch over, because what's essentially happening is we're getting rejected by the bull market support band. That is what's happening, right? And not everyone pays attention to the bull market support band. Oh, the sunset was really beautiful today. Not everybody pays attention to it, but we are actually just getting rejected. What generally happens when we get rejected is we make new lower lows, right? So I can expect something like this. I have no faith in this thing here. This was, because what you need to see is you need to see it go through and really punch through with a lot of energy, and that's not happening. My thesis is still that we're coming down, and I know we have a lot of lines on this thing. You know what? Let me take some of these lines out, because some of them are getting annoying. But my thesis still holds that this yellow line here, this yellow line is what we're looking for. I mean, this is the 50-week moving average, right? And I feel like I sound a little bit like Gary Vee or something for a second there. This is, I don't want to sound like him. This is the 50-week moving average. And when we go below the 50-week moving average, and I know I'm talking about things that have happened in the past, and it's true that it doesn't have to happen in the future again. When we move below this, we have a tendency to come down to here. So maybe this is just some time we move sideways in the market, then we get a wick or something down, a really quick wick, and then we come back up, and that's how we trajectory, go straight up. But then the other concern is if we go down to there, that also means we're in a bear market. But that being said, it is entirely possible that we touch down there, right? We go do a quick touch and then zoom back out. And like, for example, in this case, right, we were above the bull market support band, we went down, touched it, and then we came back up. And this is the apocalypse in 2020 when COVID absolutely decimated everything. So this is entirely possible. It's kind of like we're doing that now. Of course, the trajectory previously is not the same, but we're kind of like messing around. We're below the bull market support band. We're trying to break above it. We can't. And we'll have this giant wick that just comes straight down. This one giant wick. And that was in 1 week. Okay, let's go look at that in the daily. Let's see what that looks like. Boy, you know what the problem with looking daily is? We kind of, oh, there it is. Okay, so that was, wow. That was a single day that did most of that damage. That is pretty wild. All right, so that's most of this is a single day. And then the next day was pretty bad as well. So we how much further did we go down the next day? We went down, wow, we went another 20% down. That's wild. So further 20% discount. Oof, you'd have to have diamond hands to hold on to that. That's a big dip. That's a big dip. I would have definitely bought down here when we hit this, because I wouldn't have anticipated the next day to be even worse, actually. But yeah, this is what I'm banking on. Let's make the record clear. I'm banking on one of these things happening, where we mess around above this and then we sink. And this is kind of what we're seeing, right? Play out here a little bit, I feel like. And yeah, I know it's feelings. It's not really anything else. Oh boy, what did I do here? I feel like an old guy, or like my mom or something, my dad, using this sometimes, because it's just like things, you put it in the wrong place, it's gone. I still feel like these happy faces are going to meet their, lines. They're going to be fulfilled by these lines. I still feel that way. I feel like we're doing some sideways stuff, but we're going to see a wick that just goes boom and then come back up. which is why I would tell you to make sure you have purchases in place. Like, get onto Binance or whomever you use and make sure that you have these purchases at these levels that are lower than what you'd expect them to be. Like, I have all the way down to 20,000, I think. Because we like, what it's, especially when you're sleeping, is when these kind of crazy things happen. Like, it's like you're sleeping and you wake up and you're like, wow, we dropped 80%, and and by the morning everyone's already bought the dip and it's gone. So you definitely want to take advantage of it. And the way you want to take advantage of it is by setting these buy orders lower down than whatever you can afford, right? Just stick it in so that if it happens, it happens. And I feel, and we talked about this previously, I feel pretty secure. I don't know if it's like really stupid of me to think this, but I feel pretty secure keeping the money there because they have this huge insurance fund, $1 billion insurance fund. So it's like, okay, great. If things go sideways, they're going to rescue us, I hope. But yeah, this is really what I wanted to show you today. I have a feeling this is rolling over. This is on the weekly, but on the daily, it doesn't look the same, right? It looks like we're rolling over a little bit. It's harder to see big rollovers in like a slower time span on the weekly, obviously. Aside from that, I don't have much to say. What are we at? We're about 43, just under 3. Right, where's Cardano? Cardano, this piece of crap. Just, holy crap, dude. Oh, man. That thing just rolls around. Now let's just see what CNBC is saying. Okay. Well, World War III, possibly. Yikes. This was a big hype machine when it IPO'd. Well, I do want to talk about this book briefly. This is, I think I brought up this book before. It's Why Nations Succeed and Fail, The Changing World Order. I think it's a great book. And let me just read this one part to you. This is the section where it shows the rest of the book, and let's just talk about chapter 9, 10, 11, and 12. Chapter 9, the big cycle rise and decline of the Dutch Empire and the guilder. Chapter 10, the big cycle rise and decline of the British Empire and the pound. Chapter 11, the big cycle rise and the decline of the United States and the dollar. And chapter 13, the big cycle rise of China and the renminbi. And chapter 13, U.S.-China relations and war, right? It's essentially like, this is how it happens, basically, right? This is it. Like, you get these debt cycles that occur. And how does a debt cycle work? You basically find a situation like where we're in right now, where you need to stimulate the economy. So you bring interest rates down, right? And we can interest rate chart. I know Canada increased its interest rate today. And so what you do, this is great. So what you do initially is you bring your, oh boy, why is it so small? This will actually do. No, dude, no, I don't want to become a project manager. So what you do initially to stimulate economic growth is you bring your interest rate down. And you bring it up during, better times, and you continue, you bring it up better times, and then when stuff hits the fan, like a recession here, the recessions are gray, you bring the interest rate down to stimulate, then you bring it back up, then you get another recession, and then you repeat the cycle. Now, what happens when you're already, and we hit a little bit of a recession there in 2020, what happens when, and the definition of recession is two sessions in a row where it's negative, two quarters in a row. But what happens when you hit the floor, right? Like right here, we're at the floor and you're at the floor here. What do you do at that point? Well, that is when you bring MMT in. What is MMT? Modern monetary theory. And what is modern monetary theory? Let's see if there's a fun picture that'll explain all this. Oh boy, looks like a really fun picture. I haven't seen this picture, but it looks really fun. Let's see. Modern monetary theory. 1. Faucet equals government spending. Lawmakers fund programs and services. 2. Water equals money. Government spending puts new money into the economy. Okay, great. 3. Sink stopper equals tax policy. The lawmakers use tax policy to control the amount of money leaving the economy. 4. Taxes drain money from the economy, keeping inflation in check. Okay, so you get it. So that's how you prevent, and so Okay, got it. So if you okay, so you know what, I'm not fully getting. Maybe some of you guys are getting it. If you are, please comment below that you understand this. I'm not getting it immediately, but basically, MMT for me is this faucet. Once you can't reduce interest rates any further to stimulate economy, what do? You print money to stimulate economic growth. So you print money, you print money, print money. But the loaf of bread keeps increasing by, and we've brought this up before. This book was this. Let's say this book is $10, and 2 years from now, because we kept printing money, which I suspect we will, the book is $20 or $14 or whatever it is, right? And you keep doing this until you just don't value the dollar anymore, right? Like it's like $1,000 to buy a loaf of bread, or maybe this book in 10 years, and this happened in the Roman Empire. This happened in Denmark. This happened in the UK, and what the Dutch, yeah, in the Dutch and the British Empire, and now the United States are going to follow, and of course we are following, and everyone else is going to be following. And I think this is how you end economies, right? Or the greatness of economies, and what you end up having after that is a situation like where where Great Britain is right now. It's not like it's demolished. It's not like it's gone, but it's a shell of what it used to be, right? Anyways, I'll read this entire article and get back to you on this. Okay, it starts with her, so I wonder if this is left or right leaning, but we will chat about this next time. Have a wonderful day.